Would you be able to cover your expensive medical bills if you were diagnosed with a serious medical illness? A client of mine had trauma insurance outside of her super. When she was diagnosed with breast cancer, she was able to claim a lump sum payout of $167,000. She also got income protection of 60% of her income. How long can you survive without your salary? So today my job is to talk about the different types of insurance and how they can help keep you financially secured when life doesn't go as planned. We all work hard to build financial security, but what happens when life throws the unexpected at us? The reality is no one likes thinking about worst case scenarios, but ignoring them can put you and your family in financial distress. That's why personal protection exists, to protect your income, lifestyle, and loved ones if something goes wrong. Today, we're going to be breaking down the different types of personal insurance, who needs them, and what to consider before getting covered. So, shocking statistic. Did you know that 1 in 3 Australians will be unable to work due to injury or illness for at least, and the word there is at least, 3 months before retirement? Yet, so many people don't have a proper protection plan in place. So today my job is to talk about the different types of insurance and how they can help keep you financially secured when life doesn't go as planned. So let's start with the most well-known type of cover, life insurance. This is all about protecting your family if the worst were to happen to you. So what is life insurance? It pays a lump sum to your family or beneficiaries if you were to pass away yesterday. Helps cover mortgages, living expenses, educational costs, and any debts you have that are left behind. Okay, so what are the questions for you to consider if you need or what you should do? Do you have dependents who rely on your income? So now the next question is actually, where can you get these covers from? Who covers you? You can get life insurance through your superannuation accounts or a retail provider. Okay, and really depends on the existing cover you have and health conditions. Retail providers are always more comprehensive and have a higher payout rate on claims than your super provided covers. Policies as well can be held individually by family trust or through your employer's group cover. I've had widows or widowers come to me to ask, okay, what can be done now that your loved ones have passed away? There's definitely something people need to consider, but I've known of other people who have gotten insurance and they've gotten something paid out because the loved one passed away. So now let's talk about something called total and permanent disability. And for short, I'll call that TPD. Total and permanent disability is an insurance that is designed to pay out a lump sum if you suffer an illness or injury. And that illness or injury prevents you from ever working again, physically or mentally. If you became permanently disabled, how would you pay for medical costs and living expenses? Another question is, would you still be able to make mortgage payments if you're totally and permanently disabled and couldn't work? A big one as well is, who would care for you at this point? And do you expect your partner or loved one to do that full time? Another question is, would your family be able to support you financially? Do you have enough savings to sustain yourself if you couldn't work for life? Okay. Now, where can you get these covers? Generally they can be available through your superannuation or retail policies. The different covers you can have, you can have the own occupation or any occupation. One pays out if you cannot work in your chosen field. The other pays out if you cannot work in any field. Okay, so just to give you a real life example, a dedicated professional struggled with severe mental health condition that made it impossible for them to return to work. Their total and permanent disability payout of $750,000 provided the financial support they needed to focus on treatment, cover ongoing medical costs, and ensure stability for their family. Instead of them facing financial hardship, they had the peace of mind to prioritize health and well-being. So next up, let's talk about something called trauma insurance or trauma protection. And it's your safety net for serious medical conditions. So trauma insurance provides you with a lump sum payout if you're diagnosed with a serious illness like cancer, heart attack, or stroke. Things that often require time off work and are expensive medically to take care of yourself. These things are usually temporary, and we expect you to be back in the workforce in, 2 years' time or less. So what are the questions you should consider? Would you be able to cover your expensive medical bills if you were diagnosed with a serious medical illness? Would you be able to get second opinions on that if you needed to? How would your household finances be affected if you couldn't work for months? Would you want extra funds to seek specialist treatment or alternative therapies? Would you want some funds to take time off work to relax and or just travel? A luxury, but some people want this at that point in time. So who covers you? Generally you cannot have this cover in your super, and it can be standalone or bundled together with your life and TPD insurance, which sometimes can make it affordable. The good thing about this is it pays regardless of whether you can still work or not. It's purely for medical and recovery costs. As long as you've met a certain condition on the list, you get a payout. Okay, so what's a real life example? A client of mine had trauma insurance outside of her super. When she was diagnosed with breast cancer, she was able to claim a lump sum payout of $167,000. She also got income protection of 60% of her income. What did this do for her? This gave her the financial freedom to step away from work, focus on recovery, and care for her child, without the added stress of lost income or mounting expenses. Without insurance, she would have faced not just a health battle, but also serious financial strain. Instead, she had the time and peace of mind to prioritize her health and her family. Now, let's talk about one type of insurance that replaces your income. It's called income protection. So income protection replaces your paycheck when you cannot work. Generally, what this does as well, it replaces your income if you cannot work due to injury or illness. Usually you would also get 70% of your income plus your super contributions if you couldn't work. Generally, there's a waiting period and a benefit period. And the waiting period is how long can you wait before you need funds. The longer you wait, the cheaper the policy. The question I always ask clients here is, do you want to spend most of your savings as you wait? Or would you like to balance things out to ensure you haven't finished your savings before you get any payout? There's also the benefit period. It's how long do you want to be paid for if you're unable to work? Should this be until age 65 or a shorter period of time? The smaller the benefit period, the cheaper the policy. So questions to consider to see if you need this and if it's beneficial for you. How long can you survive without your salary? Okay. Would your savings last if you were unable to work for a long period of time? Do you have financial commitments like rent, mortgage, school fees? So now, who can cover you for this? Usually you can get 70% of income for a set period of time, and it can be through your superannuation account or, through a personal retail policy. Usually the personally owned policies are tax deductible, which makes it very advantageous to have this as well. So a real life scenario, a company director earning $400,000 a year was unexpectedly let go after experiencing severe mental health challenges. And, that left him unable to work. And with no income and mounting uncertainty, his income protection policy kicked in, covering 75% of his income, and this was based on the old structure, hence why 75% of his income. But what did this do for him? This provided financial safety, allowed him to focus on his recovery without the added stress of lost earnings. And he also ensured he could maintain his lifestyle and support his family during such a difficult time. So without income protection, he would have faced serious financial hardship on top of his health struggles already. Instead, he had the breathing room 2, prioritize his well-being and plan his next steps. Finally, let's talk about an often overlooked type of insurance, and it's kids protection. No one likes to think about this. If your child was facing a serious illness or injury, the last thing you'd want to worry about is money. Kids trauma insurance provides a lump sum payout, and this helps to cover things like medical costs and lost income for parents needing to take time off to really focus on their kids' health. Okay, so who covers you and where can you get this cover? So generally, it's available as an add-on to some other insurance products that were spoken about. Pays out if your child is diagnosed with a severe condition and it just has to be covered by one of those providers. If someone's son was diagnosed with leukemia, the trauma payout would allow the parents to take time off work. It will help them cover any extra medical bills and help them entirely focus on their kids' recovery and what they can do. So some people may be thinking, what should you do next? Okay, so you need to review your current insurance coverage. And key questions you should be asking yourself, if something happened tomorrow or if something happened yesterday, would you and your family be okay financially? Ensure you have the right insurance in place and you're fully covered. Thanks for watching and stay tuned for more episodes.